Hi students, welcome to Commerce Solutions. So today we are going to start accounting. So this is the introduction part of accounting. Today we will discuss accounting and its process. So what is accounting? So first let's read out a definitions given by American Accounting Association. So according to American Accounting Association, accounting is the process of identifying, measuring and communicating economic information to permit informed judgment and decision by users of information. So this is the definitions, and if you read definitions given by one author, two author, three author, many author, the concept of accounting will not clear. So we have to analyze it, we have to understand deeply by looking at process. In the same time we will understand the definitions and the process of accounting. So here it is mentioned clearly, accounting accounting is a process. So what is process? Process is a systematic activity. Step by step activity is called process. So accounting is a step by step process. So what is the first step? So under process of accounting, the first step is identifying and measurement. Identifying and measurement of financial transaction and events. So first step of accounting is identifying and measurement of financial transactions and event. So what is identifying? Identifying means find out. Find out and measurement. Measure means there should be a unit of measure of financial transactions and event. So what is transaction and event? We have to identify that and measure that. This is the first step of accounting. So transaction means exchange. Transaction means exchange, and events means a loss or profit, a gain or expenses. These are the event of business. And transaction means in exchange what we are giving, in exchange what we are accepting. The exchange is called transaction. So we have to identify financial transaction and event. There might be many type of transaction. So whole transaction is divided into two category. One is financial transaction and rest of all are non-financial transactions. So our intention is to find out all the financial transaction, that is called identification of financial transactions. So those transactions which can be measured in terms of money or money is owed is called financial transaction. So we have to find out first which transactions are financial transaction. For example, sales, purchase, payment, received. These are the financial transaction of a business. Example of non financial transaction is efficiency of a manager, the capacity of a investor, and the management efficiency. These things all are non-financial transactions, though these are very valuable, these are very important for organizations, but we can't record it. Okay, so what is measurement then? What is measurement? Measurement means we have to measure. A unit of measure is called measurement. For example, our goods lost by fire. Our goods lost by fire. So how much goods lost by fire? We have to measure it. We have to measure it in terms of money. First, we have to measure how many kg or how much kg this of raw materials are lost. If it is measurement, then multiply the price, that will be measurement into price is equal to what? Is equal to a figure. For example, 10,000. This is the financial figure. We can record it then. Without measurement, we also cannot record. So first step is identifying and measurement of financial transaction and event. So transaction means, example of transaction is sales, purchase. Event means profit, losses. Next step is recording. Next step is recording. Recording all the identified transaction and event in journal. So recording means we have to mention all the transaction in journal. We have to record in journal. So what is journal? Journal is the primary book of entry, and we have to record chronologically. Okay, chronologically means as and when happen, due or receive, whichever is earlier is called chronological record. So here we have to record. We have to record identified transactions and events in journal. So we have to prepare journal first. So here the accounting will initiate, the record will initiate. The next step is classifying. Next step is classification or classifying. So what we should classify? So classifications means extract the record and create a different ledger for each transaction and event. Okay. So here we have to classify the recorded data. Classifying recorded transaction and events in ledger. So ledger is the secondary book of entry where we have to classify separately. Moreover, it is an account. Each expenses there should be a different account. Each asset there should be a particular account for a particular asset. These things are called classifications, and in the help of ledger we can classify and collect the data from journal and posted in ledger. This is the second step. Then third step is summarizing. Third step is summarizing. Summarize means list out all the closing balances of ledgers. List out all the closing balances of ledger and prepare a list that is called trial balance. This is called summary, because in one statement we can find all the closing balances of ledger prepared before at the time of preparing ledger. So here summarizing the recorded classified transactions. Okay, those transactions are classified in ledger. We will summarize that. Summarize means just take out the closing balances of all the ledger and prepare a list that is called trial balance. So why we are preparing trial balance? To check the arithmetical accuracy of our record and classifications. Our journal and ledger, we are preparing trial balance to check the arithmetical accuracy and ready a statement, ready a list to further our process, that is preparation of final account. Then analyze. Then analysis of summarized transactions and events. So analysis of summarized transactions and event. Here different books mention differently. Some authors are adjusted this summary into sorry, some authors are mentioned that trading account and profit and loss account, it is also a summary. After trial balance we are preparing trading and profit and loss account, so it is a summary. Analysis are not clearly mentioned in many books, but the fact is preparing final account is analysis of data. Preparing final account is the analysis of data, means preparation of trading account. What we are doing in trading account, we are looking how much the purchase, how much the sales, how much the opening stock, how much the closing stock, and the result will lead to gross profit. So we are analyzing different data and getting a result. So this is a analysis. Okay. So in the analysis process of accounting, we are preparing final account. Final account means trading and profit and loss account and balance sheet. Okay. We are collecting data from trial balance and putting in a format and preparing the profit and loss statement and balance sheet. That is called analyzing. Next step is interpreting. Next step is interpretation. So what is interpretation? Interpretation of analyzed data. Interpretation of analyzed data. This step. Analysis means preparation of final account. Preparation of final account. So here interpretation, there is interpretation of analyzed data and prepare ratio analysis statement and cash flow statement, fund flow statement, cash flow statement and fund flow statement. So ratio, calculation of ratios and preparation of cash flow statement and fund flow statement is called interpretation, because here we are producing ready-made analysis and ready-made interpreting the financial data. Here what we are doing, we are interpreting, we are comparing asset to the liability and find out a ratio. We are comparing with net profit and all the expenses and find out a ratio. So these things are interpretation of data. We are interpreting and extracting the meaningful judgment. So with the help of interpretation of data, the shareholder, the stakeholders, all the stakeholders can know easily the performance of business. That is called interpretation phase of accounting or interpretation process of accounting. The last one is communicating. Last one is communicating. Here we are communicating. We are communicating all the informations, all the financial informations. We are communicating PL statement, we are communicating balance sheet, we are communicating cash flow statement, fund flow statement, ratio analysis statement. All these we are communicating to different shareholders of business or different stakeholders of business. Stakeholders means users of accounting informations. Okay, those have interest in business, interested parties. So we have to communicate them. How we should communicate? We have to publish in newspaper, and in current scenario we are publishing all the statement in our website. This is the communications of what? Financial informations. Here the process is on end. Here the process of accounting is end, and last phase is communications. So the final work is communication. That's why accounting is a communication process. Accounting is a communication process. The accounting is the language of business. So where is communication, there must be a language. So accounting is a language of business because business is understanding its efficiency or understanding its performance through the accounting. Okay, that's why business is a accounting is a language of business. So here the complete process is mentioned. Please note out all the points. Now I hope you all are understand the what is accounting. So accounting started from identifications of financial transaction and event. First we have to understand what is transaction and events. We should be differentiate transaction and events. Okay, those are financial in nature. These are eligible for recording. Then we are recording in journal. How we are recording in journal? With the rules of debit and credit, we are recording in journal. Then we are posting. Then we have to posting all the transaction into ledger, because ledger means classifications. Without classifications, we cannot get the ready data. We cannot get the process information. Journal is lengthy, and with the help of journal we cannot draw the data quickly. Okay, to get the quick information, so we have to prepare ledger. So after preparation of ledger, in the end of the year in the end of the year we have to summarize them. We have to summarize them to what? We have to summarize them to check the arithmetical error, where there is error or not. The recording process is correct or not. How we will know? After preparing trial balance, if both the side of trial balance is tally, then we will confirm that accounting record is correct. So trial balance, again, it is the base of preparation of final account. Okay, we are collecting data from trial balance and preparing final account. Okay, this is the database. So after preparing trial balance, we can prepare final account. Then the interpretation process will begin. We will analyze. We will try to interpret all the informations. We take out the figures from PL account and balance sheet and interpret it and to supply the interested parties. That is called communications. Here all the process of accounting is done. So from this we can conclude the definition of accounting. So accounting means is the process of recording, summarizing, analyzing, interpreting the data and supplying all the data to its interested parties and communicating them. This is all about accounting. Hope you all are understand all the concept of accounting. So please review the video again so that you can understand perfectly. After watching all the videos, please note out the note and please like and subscribe if it is understandable. Thank you.